I'm Chris Preston.
Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network, which has been delivering investment advice for 55 years to individual investors. Brad, we talked about something right before we went on air. You were excited about the new Running Man movie. I've never seen the original, which was
S-
Arnold Schwarzenegger. This one, I believe, is Glenn Powell. Is that out this?
Yeah,
That's out later this month, right? I
yeah, I think so. I think maybe this weekend, maybe next.
think it might be next.
The thing that I think prompted me wanting it on record is you've never seen the original Running Man?
No.
Like that is it's not a great film, but it's like it encapsulates everything that sort of made those ridiculous over the top 80s movies great. It's
Yeah.
got the cheesy one-liners, it's got like the sort of absurd sci-fi stuff. I'm a little bit surprised because my assumption is that you are very familiar with Schwarzenegger's catalog. You've
Oh,
seen
of
Predator,
course.
right?
Predator, Terminator, both of them are both the good ones. Kindergarten Cop. Um,
Conan?
no, never seen that one. Total
Oh
Recall.
man.
Total
Okay.
Recall. I'd
So
say I've seen seven True Lies. I've seen like 75% of his 80s and 90s movies, but not
okay.
this one.
All
Yeah.
right. Well, that's your homework assignment then. It's not Running Man. Running Man is great. The remake of it will probably be whatever.
Yeah. The
But
Total Recall
Conan the
remake, I
Destroyer,
watched 5 minutes. It was so bad. I turned it off. It was with Colin
it's
Farrell. It was
yeah.
bad.
I imagine this Running Man remake. It actually looks kind of good from the trailers, but I think it'll probably be like that. But see Conan the Destroyer or Conan the Barbarian, um,
Yeah, I'm aware of those. I've just never
check them
seen.
out. They're
Okay.
classics for a reason. It's
Okay. Yeah. Well, I might start with Running Man. Conan seems the outfit just seems a little ridiculous. Um, okay, let's get to investing. Tell people what is on today's docket.
We are going to talk about the pullback in the market, whether it is the real deal or just a false start. We'll talk about Michael Burry taking a big short position in Palantir and Nvidia. I think our guest might have some notes on that. And we're going to talk about Musk's pay package getting approved. I think it has divided the room a little bit. And then
Yeah.
Mike Cintolo is going to join us, Cabot Growth Investors Mike Cintolo, to talk all about the market and what he's seeing right now.
But first, as always, we start with our defend the take. And Brad, you're up this week, and your take, for which you have 90 seconds to defend yourself, is that OpenAI's rebuffing of IPO rumors and floating a government backstop means that we're in the end game of the AI bubble. It's a mouthful, but I'll let you elaborate. You have 90 seconds. Go.
Okay. So a couple of weeks ago, OpenAI was looking at maybe doing an IPO. I have long maintained that the IPO is going to be like that'll be the thing that pops the bubble because everybody's going to get to read the S1 and actually see what the expenses look like, what the revenues look like. We've talked about the losses they've taken as imputed by like Microsoft's earnings. The fact that they sent up the trial balloon about having a government backstop for financing, it means that the I think I say this too much, but it means like the rubber is hitting the road. The IPO rumors landed flat, right? Everybody was asking the same questions, the ones that we're asking. And then they pivoted to potentially government backstopping what could be $1 trillion in data center development. I had initially maybe pitched like, well, the transactional nature of this White House meant that that's a no-go. But yesterday, somebody in the White House said we're not going to bail out AI companies. Um, this is it. We are at the moment where these companies are going to need to put up or shut up. Nvidia we've talked about already, has shown signs of diversifying away from just GPU production. Uh, we are in the final stages, I think, of the AI bubble, and it'll resolve itself maybe in the next 6 months. Like I know that the timeline is sort of loose on it, but we're seeing it now. We're seeing selling pressure in a lot of the AI names. Um, this is not the game's not over, but we're in the end game.
All right, good. Yeah, you hit the post. Perfect.
Yeah.
Yeah, I was going to ask you for a timeline in there, what you meant by end game. 6 months. Yeah, that's ambitious, or not ambitious, probably the wrong word. Bold. I think I still feel like we're closer to a year out. But we agree fundamentally that AI is a bubble, approaching a bubble. And I think it was cited on here a couple of weeks ago that spending is outpacing revenue six times. It's like capital expenditures are six times the revenue generation at this point, which is like twice what the ratio was at the height of the dot-com bubble. It's like 3 to 1. So, um, hard to argue that AI bubble is coming.
So
6 months, yeah, I guess we're splitting hairs, 6 months versus 12 months, but
yeah.
it's not a bad take. And it does seem like we're hurtling towards it maybe a little quicker than we were, say, a month ago.
Well, one thing that, when pitching that take that it didn't occur to me, but is occurring to me now, news just came out that Apple is going to pay Google $1 billion a year for access to Google's Gemini AI model in lieu of developing their own. I said years ago, last year maybe, I don't know, that Apple was like the best AI company because they weren't doing the CapEx spending.
Yeah.
Well, Apple has, I don't know, how many hundreds of millions of people globally are on Apple devices. Um, Paying for $1 billion a year for access to from Apple, that that should cause a lot of people to re-rate what the amazing tech that is coming out of these. These are not useless. There are math and materials developments. There's a like a new nanotech skin cancer thing that I think they developed partially with some of these large language models that has like really high efficacy. I I might be wrong about the AI connection there, but there's actually like biotech development. There is really good tech in here, but it is not the thing that they've been trying to sell us for 3 years. And we're going to watch that play out. The market response to it is obviously a different question, right? Like if the Supreme Court comes out in a week and says, "Hey, Trump's tariffs are illegal. We can't have the market's going to have a relief rally there." Um, if the government reopens and we get a lot of like good data, and I think we've still got room to rally there. But I do think that we are in the final stages of it. I have said for a long time, I'm not stepping in front of the freight train of AI. I'm ready to sort of dance on the tracks a little bit now.
All right, good take. Okay, let's shift. I mean, this is sort of um, possibly related. Shift to number one in our big three, market pullback, which has sort of been partially led by AI companies. Some of the AI leaders have pulled back sharply, and the market as a result has pulled back about 3.5% as of this moment from the highs of about 10 days ago, late October. There's been a few of these sort of false stops, I'll call them, over the last couple months, notably after, you know, President Trump escalated tensions or rhetoric with China about a month ago, and those have since been quelled as everything's hunky dory. And after his meeting with President Xi, I think he rated it a 12 out of 10. Their meeting, but that was the last time there was a pullback like this. But that lasted like what, one day or two. It's not every day, but I mean, this week alone, market's down, S&P is down almost 3%. This is every day, and the VIX is notably back above 20. It's above 21. What do you think? Do you think this is sort of the correction we've been warning that's been coming for a while? I think one of my takes was I thought it was going to happen in, it's traditional September, October. It didn't. And now that I think my take last week was that the calendar no longer matters. That, we've started November, which is traditionally the start of the best 6 months for the market. And I said, well, I don't know how much that matters. Holiday shopping season helps, but that's not really here yet. And sure enough, November's off to a pretty rough start. What do you think?
Um, technically we're still in a bull market, right? We're
Yeah.
still setting
And
higher
let me
highs.
clarify. I don't think that's going to end. I
Okay.
think I've been saying a 5% correction or more, which is, we're not far from that right now, is coming before year's end. And I think, I think we're going to get there this time. But, it's been the boy that cried wolf several times here the last few months.
Yeah,
I'm
I
told.
would not I wouldn't be surprised. Coming into today, I was looking for support at the for the S&P at 6660 or so, and it's sort of broken through that today. We've seen high volume selling in the first like hour and a half of the day every day this week.
Yeah.
And then we've followed up with higher volume selling at the last hour of trading, which is typically when institutional traders, although lately I think retail has been more an end of day than just institutions. But the selling has been coming on higher volume. Um, right now we're still above the 50-day line. If we break
Yeah.
through the 50-day line, then yeah, I think there's probably worse in store. One thing that we have talked about before is the equal weight, the S&P equal weight index. That's sitting very close to support at like 7,500.
Yeah.
Uh,
That is, by the way, I looked this up. Equal weight is flat since July 4th.
Yeah. So like if we go back to June levels, that the beginning of June is when we really started taking off. That
Yeah.
puts the S&P at around 5,900. So that's full on correction, almost halfway to a bear market, or a little bit more than halfway to a bear market, because I think that's like a 15% decline from the all-time highs, give or take.
Yeah.
Um, Yeah, I mean, I could see this turning into a full blown correction. There's been like whispers of liquidity issues where the Fed's having to step in and do some reverse repo lending. Um, that that could feasibly explain why we're seeing selling in gold, Bitcoin, high volume tech stocks, like all the stuff that's easy to sell and that has appreciated a lot. Like the selling has been pretty uniform. So I could certainly see a correction now. I'm hesitant to like I know that our big thing is that we call stuff, but I'm hesitant to call this in
Yeah.
particular until at least like the S&P cracks the 50-day line. Maybe once the S&P cracks the 50-day line and the equal weight gets below like 7,500, then I'm probably on the correction side of the equation. Right now, it doesn't feel totally different to me just because we've been saying, hey, AI bubble for like 6 months or a year or 2 years, or we've been talking about how bad the valuations are for a long time. So yeah, it could totally just be some speculative air coming out of the balloon. Is Bitcoin below 100,000 yet, or
It
did
was
that bounce back
briefly.
today?
Let's see. Yeah, I mean that's sort of the under the surface tells, the number of um stocks on New York Stock Exchange that are above or sorry, below their or sorry, at 52-week lows is above 40, which for Mike, who we're going to have on, is a tell. Yeah, Bitcoin being, as we've talked about, sort of a bull market play, that's sort of imploded. I mean, technically, that's in a bear market right now, right? From 124-ish to 100.
126 to 100. So
126.
yeah, if it's below 100, it's in a bear market. So it's knocking on the door, but we saw that back in April with the
Yeah,
Liberation Day sell-off, right? With even the broader indices where they were almost in a bear market and they went on to rally. Um, I don't know that the music is over, but everybody's been waiting for it to stop. So maybe everybody's just like when you play musical chairs and everybody slows down because you're
yeah,
expecting it. Maybe we're seeing something more like that.
yeah.
Um,
Now, I
but
don't even think this will be. I mean, April, we were close to actual bear market. I mean, we were in the Nasdaq and Russell 2000. I don't think this is going to approach that because there's no sort of well, there could be, but as of right now, there's no like Liberation Day that's like
yeah.
something that's going like a catalyst, negative catalyst. Um, so I think this is people have been talking for months about how overvalued the market is, at least in the major indexes. And yeah, I think, like you said, this could be some air coming out of the speculative balloon, and things have shifted at least temporarily to risk off mode after being
Yeah.
risk on for months. I think part of the reason I don't think this will be more than a 5-10% correction, if that, we haven't gotten a 5% correction since that April breakthrough, or sorry, April bottom, um, is because of the equal weight index. Most stocks haven't budged since 4th of July. This has been we're back to where we were in 2023 and a lot of 2024, where it's just big tech and AI driving
Yeah.
the driving the boat here. And everything else is sort of running in place, or worse. And that's why I think the bull market will continue. But I don't think we're done with the pullback. This is, like I said, this week we're down almost 3%. I could see some more weakness next week.
Yeah, I think you're right. I think we've got room for more speculative air to come out before anybody gets, I think, panicky.
Yeah,
So it could go either way, certainly.
yeah. Well, speaking of people who are bearish, Michael, is it, is it Barry?
Burry,
Pronounced Barry? It's Burry or Barry?
Barry, Barry.
Burry.
I
Um,
try and split the difference.
yeah, is short. It's made a lot of headlines. Short Palantir and Nvidia, two of the, maybe the two darlings of the AI boom. And both stocks have pulled back, especially Palantir. Sort of since then, I think we talked about it on here. I think you had some data on how he's been frequently wrong since, famously calling the Big Short, um,
I
in
think
08
that
to
might
09.
that might have been Jamie.
Well, I
That
know
might have
we
been
did Jamie
Jamie
Dimon.
Dimon.
I thought a while further back that you had some data on him. I think he calls stuff a lot, and
Yes.
he has not. He at least has not had a headline grabbing right call since then that I can remember. Doesn't mean he won't be wrong here. I mean, we've been talking about an AI bubble, so it doesn't mean he's wrong. He could be early. I don't know. What do you think?
So he had a tweet, I think it was in 2023. I'm looking that up right now. That was just the word sell. Um, yeah, January 31 of 23. He just came
I
out
feel
and
like we
said
might have
sell.
talked about, January. Yeah, I don't, maybe not.
So
But
so like if you sold when he just told you to sell, you missed 2 years of a bull market.
yeah,
Or almost
3 years.
almost 3 years now. Yeah.
Yeah,
So you missed like the
like the
entire bull
entire
market.
bull market almost.
Yeah. Um,
Yeah,
so yeah, if you're all these like Dr. Doom guys, all these doomsayers, they say a lot, and then if they're right, they look like geniuses, and if they're wrong, nobody cares because hey, the market's going up. I don't care if he said sell, if he was
right.
wrong. Um,
And like if you get one of these, if you get a big one right, like no one saw, he was one of the very, very few that saw the subprime mortgage crisis, what it was going to turn into or lead to a recession. If you get one of these right, you're dining out for the rest of your life.
yeah,
People listen to like your take on anything makes headlines.
yeah, and like he's not necessarily wrong, but being early
No,
is just a form of being is a different form of being wrong.
right,
Right. So if he's early, he may 100% be right. I do not want to sound like I'm like diminishing the skills and the insightfulness of Michael Berry because
no,
Burry
only Jamie Dimon.
because,
We only do that to Jamie Dimon here.
because like he identified structural issues and made a huge profit off of it. Um, we have also been talking about AI being a bubble for years, basically
Right.
since he sent that tweet. So we can be right and the timing is just off, and maybe that's the case. Maybe a year or 2 years from now, we're gonna look back and say, "Oh, I wish I would have sold in January of 23 because that's how far the market has fallen." Like he could still totally be right.
Yeah.
The one not clarification, but one item to flag. There's a lot of headlines about how he's short like $1 billion, or he's got puts for $1 billion of Palantir and Nvidia. It should be noted that when these are disclosed on the 13F, they disclose notional value. So basically, the equivalent value of the number of shares you control. That doesn't mean that he took $1 billion and bought put options on Palantir and Nvidia. He could have spent, um, 14 million.
Yeah.
Like, so the option pricing, the amount that he has at risk is not the headline $1 billion figure. That's just the notional value of the shares that he has enough puts to control. Um, I'm seeing Palantir. I saw 5 million shares, although I saw other reporting that said he had 5 million contracts. I, I should have clarified that ahead of time. Um, One of the reactions that I thought was kind of weird is how the CEO, Alex Karp, responded to it. He got he had a weird overreaction um, to Michael Burry taking a short position
Hmm.
that seemed really defensive to me, and not in a way that was confidence inspiring. I am seeing if I can find the
Well,
exact language that he used.
while you do that, I have so Palantir down 15% this week. Basically since reporting earnings, which were good. I mean, earnings beat by 25%. Um, but I guess Palantir has definitely reached the stage where unless you're blowing earnings out of the water, you're not doing enough because everything's sort of priced in. Any good news is priced in, unless you're like jaws are dropping. It's reached this stage where Nvidia was where when it stopped reporting earnings that were causing jaws to drop. It stopped getting this huge share price bumps after reporting earnings. But yeah, Palantir down 15% this week, Nvidia down almost 11% this week.
So I did find the response also the options control 5 million shares. So my initial assessment that I have jotted down was accurate. So he controls 5 million shares, even at the cheapest in the money put for expiring in December. This is a September 30 13F disclosure. That's
Yep.
$14 a share. So that'd be $70 million. Right. So that's more representative to control 5 million shares of Palantir versus like the actual notional value of it. What Alex Karp said on an interview with CNBC was, I think what is going on here is market manipulation. He would then go on to say that most of the GDP growth in this country is because of AI, and that Burry's position is probably, the quote is, it's probably just how do I get my position out and not look like a fool. So he had a borderline unhinged reaction. I didn't watch the interview, but just so
Yeah.
taken without that context, it reads as panicky and not confidence inspiring. Um,
Yeah.
I would probably, if it is how I would respond if all of my value as a CEO was speculative and not well grounded in earnings. I would probably have a similar reaction, and
Yeah.
the share price is sort of moving accordingly.
Yeah. We'll see. Yeah, he could be right. He's definitely contributed to those stocks pulling back, but this week's, it's not just those two stocks pulling back this week. I mean, is the chicken or the egg thing here. I don't think those two are responsible for the entire pullback of the market this week, despite, the weight that they carry. I do think that there's Burry is sort of early, but echoing some, a lot of questions that people have about AI and has it run up too fast type of thing. What we've been talking about for a while. Um, okay, number three on our big three, Elon Musk is now $1 trillion man. The Tesla board approved his new pay package of $1 trillion. That is roughly the same or equivalent to the GDP of Saudi Arabia, more than Switzerland, Poland, Argentina. I mean, he would be the 20th largest country right now. Um, I, my take is just I don't think any one person is worth that, period. Seems like, Tesla investors aren't thrilled with it as Tesla's down. Let me just refresh here. 4.5% today. I mean, the market's down, but 4.5% in response to the new pay package. But yeah, unless you're like, solely responsible for curing cancer, or solely responsible for solving world hunger, or, solving climate change, you know, he has a space company and a car company. I mean, that's really limiting, and this is expressly for Tesla, or at least overtly for Tesla. And also, while his name undoubtedly and sort of celebrity status undoubtedly helped drive shares to where they partially have helped drive shares to where they've gotten, his name has also this year hurt the business, and this is not a political take. If he was, on staff with Kamala Harris, if she'd been elected, or with Biden, the previous administration, I think there would have been a similar blowback, because alienating, by definition, pretty much alienating half the country. People have been selling Teslas left and right, basically because of his involvement in the government. Although he's since stepped back from that. This is not worth it. No one person is worth $1 trillion, and especially one as polarizing as Elon Musk.
All right. I think it's a totally reasonable pay package.
It's
Um,
a wild take. This is your
yeah.
wildest, and it's most surprising take yet, I think.
So like my knee-jerk reaction is very similar to yours, where it's like, no, that's insane. That's a stupid amount of money to pay somebody. Setting aside all of the whether or not the world should have billionaires conversation of it all. If you look at
Brilliant.
So even billionaires, let alone trillionaires, but
Yeah.
even billionaires, setting aside all of that, if you look at the actual terms, it's not that big of a stretch to kick him 12% of the company. The way that it's structured, the board currently values the deal at $88 billion. That's how they are valuing it, with some commentary or some coverage that I'd read. But if you look at what he actually has to achieve to get to that $1 trillion valuation, it's broken into 12 tranches. They unlock if he hits certain milestones, and then there's a 7.5 to 10 year like holding requirement, basically a lockup for the shares that he gets. The first milestone he has to hit is a $2 trillion market value for Tesla and 20 million vehicle deliveries. Tesla right now has a market cap of 1.35 trillion.
Yeah.
Yeah, so he's got to add 50% to the market cap, but in its lifetime, it looks like Tesla has delivered about 7 million cars. So it's got to put out 200% more Tesla EVs for him to unlock that tranche. The tranche after it is 2.5 trillion valuation with 10 million active full self-driving subscriptions. That actual number doesn't matter. What matters is they actually have to get full self-drive to work. The tranche after that, 3 trillion valuation, 1 million robots delivered it. So that's 1% of US households roughly have to have a Tesla Optimus robot walking around in the background. That's just deliveries. The tranche after that, though, this one is maybe a little bit of a cheater. 3.5 trillion market cap with 1 million robots in operation. So he gets paid out once if you get the robots delivered, and a second time if they actually work. But to get to the top of the payout, 6.5 trillion is his third to last tranche. 400 billion in adjusted EBITDA. EBITDA in 2024 for Tesla was 14.7 billion. So that's just under a 30x. And then to get to the last one, he has to hit an $8.5 trillion market cap. That's 6 times the current Tesla market cap, or 6.5 times the current Tesla market cap. So it is such a pie in the sky moonshot structure that it's almost like a contract incentive for like an NFL player where it's like, hey, look, if you hit 2,500 receiving yards, yeah, we'll pay you an extra $2 million. And he gets a bunch of Tesla shares he would end up with 28.8% of the voting share. But if we are taking Tesla as it exists now, and Musk is able to engineer such a significant evolution of the company that there's a robot, there's half a dozen of the Optimus robots in your neighborhood, there's a Tesla in every garage. Like that's transformational company growth. Sure, give him 12% more of the company, right? Like that seems like the value calculation for the board of directors and even the shareholders is relatively reasonable. The headline number is absurd, but what it would take to get him there is such a leap that I don't think it's unwarranted.
Perfectly reasonable and well thought out and well supported take. My response is no one, even in the best case scenario, should be worth $1 trillion, especially when that best case scenario involves cars and robots. Sorry.
Yeah.
Um, okay. Before we welcome on Mike, let's tell people what our special offer is today. If you go to cabotwealth.com/street, we are offering Cabot Dividend Investor for 50% off the normal price, just $297 for the year. That's run by Tom Hutchinson, who's been a longtime dividend expert who's been on this show many times. You get a 30-day, 100% money back guarantee if you want to try the service out for a month and see if you like it. Again, for just $297 for the full year if you stay on, 50% off the normal price. You get weekly updates, monthly issues, which usually have a new pick, and access to Tom. You get free stock reports, stocks to buy for an aging America, creating the perfect portfolio, tips, tricks, and strategies, the ultimate guide to choosing, owning, and selling MLPs, and the great AI utility transformation. So again, go to cabotwealth.com/street and you get half off the normal price to Cabot Dividend Investor for a year. Okay, let's take a quick break and we will welcome on Mike Cintolo. All right, welcome on Mike Cintolo, Cabot's Chief Investing Strategist and Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. Mike, Brad and I have been talking about clearly there's a market pullback of some kind going on right now, led kind of by growth, AI leaders, things like that. We were sort of debating, it wasn't much of a debate. I've been saying I thought that, a correction of at least 5%, maybe 10% was coming for a while. I thought it'd be September, October, just due to valuations, really. But it seems like that's been pushed back. But that I don't think this is the end of the bull market. I think we agreed there. What's your take on what's happening right now?
Yeah, pretty similar. I mean, I think, well, yeah, big picture, you can never be sure. Maybe this is the top of all tops, but no, I mean, the odds, the price action this year and a lot of other secondary studies, plus, by the way, the long-term trend, tells us the odds strongly favor, higher prices down the road. I would say starting in late September, we started to see the broad market. So we call it 2-second indicator, but it's basically just the number of stocks hitting new lows
Yeah.
shouldn't expand past a certain level, especially when the big cap indexes are hitting new highs. So you see that at sometimes you see it and it doesn't work, but a lot of times you see it at some sort of top. We actually did see it earlier this year before the tariff plunge. Again, I'm not anticipating something like that, but you see it near intermediate term tops. And then the rally that we had in late October, kind of after the US China trade spat, we kind of came down
Yeah.
for a day. Really, it was like one day, one afternoon.
Right.
But that really was like nothing went up except for the S&P and NASDAQ. Like everything else just kind of sat there. Even growth funds didn't really confirm, stuff like that. And now you're kind of seeing it come off. So I agree with you that it seems like it does feel, I mean, we're recording this as the market's getting hit today. So of course it feels like, it might be time for a correction, which would be well deserved after 7 months without any selling at all, basically. At the same time, the intermediate term trend is still on the fence the way we look at it. And so, maybe this is another pullback, or maybe we open down Monday and we rally from there. It's one more shakeout. But I do think the evidence is worsened. So we've pared back, but I'm not quite willing to say, well, we've broken here and, it's going to take, it could take 2 weeks, it could take 6 weeks or whatever. It's going to take some time. I'm not quite there yet. I still think there's a chance this could be yet another stick save by the market, but we'll see how it goes.
So one of the things you're talking about, just the sort of under the surface behavior. I think we had some of the worst market breadth for the S&P in the last 50 years on the 28th. something like 80% of stocks had declined, and then, like you said, it was a net positive day because of the mega cap tech stocks,
Right.
hyperscalers, Mag 7. Um, are you on edge? Like, are you watching this and feeling acutely on edge because of it, or is this feeling more like a little air coming out of the balloon?
Well, I mean, I think it depends what you own and where you own it and how much where you are in your portfolio. I think if I was on margin, I'd be a little like, ooh, and chances are if you own 10 or 15 stocks, you've hit some air pockets, at least in growth. You know what I mean? It's not
Yeah.
like there's definitely things holding up well. A lot of things are actually pulling back normally, but there's definitely things that have getting clocked. I'm not like, I'm always worried. I mean, I'm not worried like, hey, we're going to have another tariff plunge. Anything's possible, but I just try to take it day to day. We didn't predict the tariff plunge. We just kind of took it day to day. Next thing you know, things fell apart. But I still see a lot of what I would say is so far, this can change, but there's a lot of like the storage, Micron and Bloom Energy. I just recorded the weekly video. I mean, there's a lot of Sienna. There's a lot of these like hot extended names that you'd be like, oh, this is really going to get hit when the market pulls back. And so far, I mean, they're down, but they're not getting hit that badly. So, I just think I don't have a strong opinion. I'm trying to just kind of go with it right now. I'm thinking we could be entering a correction, but I don't think it's the end of the bull market. But I still think there's a chance, like I said, I still think there's a chance this could be like another shakeout. Fear level gets up, some piece of bad news comes out next week, and then we start a year-end run from there. You know what I mean? So
Yeah.
let's just see how it goes from here. I'm kind of on the fence, like the intermediate term trend is.
Yeah, is there a case to be made that a correction like this, especially given all the valuation concerns lately, is actually a good thing? I mean, you've written about how the most money is made. I can't remember how you phrase it, but there's a lot of money to be made on the next big upswing, at the beginning of the next big upswing. And we've sort of been in a holding pattern for a little while now,
Right.
maybe partly because of those valuation concerns, but a real correction, on the other side of that, there could be a good time to buy, right?
Oh yeah. I mean, the big money's in the big swing. And I would just
Yeah.
say that there's definitely been a lot of stocks that have had big runs in the last few months, clearly.
Yeah.
There's been more stocks that have not. So, and
Yeah.
I don't just mean like, oh, transports or I'm not talking that. I'm talking cloud software. I'm talking cybersecurity. I'm talking, retail looks horrible. I mean, retail,
Yeah.
Chipotle and Kava, Jesus.
Yeah.
So, I'm not saying those are going to come out and be huge winners to, 5 weeks from now or something, but there's been a lot of like growth areas, crypto, that hasn't really done much. So, yeah, I think if we had a correction, I mean, I never root for it, but I mean, if it happened, they do happen. We've had 7 months up without any selling. I mean,
Yeah.
it's been like 3 day pullback. So
Right.
if we do have one, I don't know how long it will last or whatever, but yes, I think we'll come out of it. And I do think we'll have I think we'll have some fresh leaders, number one, that have good stories, good numbers, good liquidity, and or some of these hot names will pull back and they will etch, new launching pads and stuff like that after some steam comes out of them. So we'll see how it goes. I think just staying flexible here is the best way to do it. I know, I like to come on here and say, I'm sure I did. You guys had us on in April or May saying blast off indicators, we're buying, or like, hey, we just broke the 200-day line, we're 80% in cash. I think right now it's a little bit, obviously, in the middle of those two.
Yeah.
Is there anything that you are looking at, maybe it's like a catalyst that could trigger that next leg up? So, we come out of correction or not, we have this period of uncertainty. Like, where's the next leg higher coming from, do you think?
Yeah, it's a good question, Brad. I was actually thinking about this today, sort of in the opposite sense, kind of like with some of these names, I'm like, how many more deals, can be announced for the data center or whatever? You know what I mean? For individual stocks, it can help, like if it's a smaller company, they make a deal with OpenAI. But for the broad group, you're kind of like, it feels like maybe some of this has been discounted for now. I don't have a good answer for you, but
Yeah.
maybe one of it would be, like I was saying, there's these other areas that are growth medical, stuff like that. And there's been some things that are starting to emerge, but there could be more, some new, all of a sudden, some drug approval or something that, the market starts to focus on. It's not like a macro thing, but it's like, oh, there's these blockbuster drugs that are coming on board and that, or something like that, where maybe the market can focus on some new leadership. But I don't really know. It could be, maybe the Supreme Court strikes down tariffs. I mean, I really don't know. We'll just take it as it comes.
Is there, you mentioned a couple sort of sectors there. Is there one that you have your eye on for, I guess that might be more curious or bullish on right now than others? I guess non-AI,
Right.
non-AI group.
Yeah. Well, outside of AI, I mean, I think I just mentioned them, but I guess I would say I have noticed there have been more medical names. They popped up a few weeks ago, then they kind of chilled out. Some more have popped up. Sometimes that's a little defensive. I'm talking growth, smaller to mid cap. I'm not talking like stodgy, Pfizer or whatever. So that does intrigue me because there's been a lot of stocks there that have good numbers and sales and earnings and huge estimates and decent sized valuations too. But it's not like they're $100 billion or something. So I do think that, and I do think honestly, one thing it's been an unusual year, not to go on a tangent, where to me, and this isn't excuses or anything, but like relative strength, like in the decline in February, March, you had a lot of stocks hold up relatively well. They got hit, but they like held their 200-day line and the market did and stuff like that. And then they popped to new highs in May, like ahead of the market. And you're like, oh, this is going to be a leader. But a lot of those software, payments, cybersecurity did have a run into like June, but they kind of either ran for, a month or, whatever. And then they've just been stalling out since June, So I think cybersecurity, medical, stuff like that seem like the two growth areas where there's legitimate stocks, liquid stocks that institutions play in, but for one reason or another, they just haven't really moved that much, since they spiked in May and June. So I think those could, get going, but we'll see how it goes. I mean, maybe it's just going to stick with AI for another 6 months. That's okay.
Is retail a stay away for you now?
Yeah. I mean, I love retail. I love my cookie cutter stories. I love to write about them. Easy to understand. Kava was a nice winner for us last year. But they really just have, yeah. I mean, I know there's concerns about spending and whatever, SNAP benefit, all this stuff. And this has been going on for weeks and months and unemployment. But for whatever reason, I mean, you just have even like a Chipotle, which isn't a huge, growth leader anymore. It's just, it's a big, solid company. But that stock's, been circling the drain. So yeah, I'd love a nice restaurant or chain or, even like Boot Barn, stuff like that. There's some good stories and numbers out there, but they just, Boot Barn's okay. But some of these things look really, really bad. So I'm staying away from them. I always keep an eye on them, but something gaps up 25% on earnings, maybe I'll be interested. It's turning the corner, but we're seeing just the opposite these days.
Yeah, I wonder if heading into like holiday shopping season, if there's nowhere to go but up for those, but
Maybe. Yeah.
but you never know. The more economic data comes out that could weigh on it. But
Right.
yeah, that's interesting that you're, because I know you do love your cookie cutter retail
Yeah.
names usually.
Yeah. Bad. Yeah. I don't know.
Last question. We've been talks of an AI bubble, of course, gold bubble. Is
Yep.
there a New England Patriots bubble? Are they a little over
They're
their
a little,
skis?
yeah, I think we went from, I hope we can win. I think coming in the year, everyone's like, all right, real coaching and whatever. Hopefully we can win like 7 games, have a real season, make it
Yep.
be interesting. Maybe we sneak in the playoffs. It went from, hey, maybe we can win 7 games to then when we beat Buffalo
Yep.
and, and May started putting up the numbers and he's been awesome. It became like, can we go to the Super Bowl? And, so I think it's expectations got a little bit, it's like the market. People went from a little bit, a little bit too happy.
Yep.
So they're a good team. I don't think I hope I'm wrong. I'd love to see them prove me wrong, but I don't think they're quite in the top, 5 or 6 teams or anything yet. They have a very thin roster. So if they do get some injuries, it will be tough. And this week with Tampa Bay, that will be a good game. If they could beat up on Tampa Bay in Tampa Bay, I might think differently, but I think they're heading in the right direction, but it's going to take a little time.
You would sell high here if it was the Patriots were an investment.
On a short-term basis, yeah. It's kind of
Right.
like the market. Maybe we have a correction or something like that. I could see that. But no, I definitely think the arrow was pointed up with, real coaching staff, real
Yeah.
quarterback, and some good play. They have some good players. They just don't have a ton of them.
Yeah.
So,
Well, it'll be an interesting race between our two teams. Me being a Bills fan. It's too bad
Yeah.
Brad's town doesn't have a or state doesn't have a real NFL team.
They got
Oh wait,
Jacoby.
do
We
they?
gave them Jacoby Brissett, so you're welcome, Brad. We Patriots gave you guys that this
Yeah,
year.
we
So
got a win last week because of it, and now Murray's on the IR,
yeah.
and we've got a matchup with the division leading Seahawks to maybe be competitive. I mean, like right now, I was looking at the odds. Right now, Pats are like plus 135 to win the East. Bills are minus 170 despite being a half game back.
Yeah. That makes sense.
So
Yeah.
I don't know.
That's the
I'll
Chiefs
take a
bump. That's the beating the Chiefs bump. But they do that. They beat the
no.
Chiefs in the regular season every year, and they lose them in the playoffs every
Right.
year. So I would have taken a loss just to, maybe reverse that. But
It's a wide open AFC. So this year,
it
there's
is.
not really that's the one thing I would say is it's not, the Chiefs. I thought the Chiefs were going to roll last week, honestly, because they've been playing so well. And the Bills are good. But, they have, what do they have, 4 losses now? So, I mean, they'll probably be there at the end, but there's a lot of, it's wide open. So,
Yeah. Well, thanks for joining for investing in some NFL talk. And yeah, we'll see where things go from here. You know, uh, I I really don't think a pullback is. I think it's healthy for the market. Even a correction is healthy for the market. But I agree with you that a year from now prices are likely to be higher, and I think it's still going to be a good time for growth investors, even if there's the next month is a little bumpy.
right. And one thing I would say is either way, because I actually am not having trouble filling up my watch list with good stocks. And I'm not talking ones that are, good, meaning they're like sticking straight up in the air. I mean, stocks that are probably could be a decent entry point somewhere around here or a little higher, a little lower, something like that. I would just think that whether it's short term, meaning like this is a shakeout and we rebound, or intermediate term, meaning we have a whatever. I'm not going to predict the time frame, but we have a 6 week correction and get some fear level up, and then we
Yeah.
kick off going into 2026 or something like that. Either way, in the next few weeks, I think there's going to be a decent set of high high probability entry points in real leading stocks. So it's good to have your shopping list ready now and just to stay in tune.
Right, those are good parting words. Mike, thanks for joining us as always, and thank you everyone for joining the latest edition of Street Check, and we'll see you again next week.